Good morning, this is Pulse Point News, bringing you today's top U.S. news headlines for July 22nd, 2025. Let's dive right in. The PJM interconnection, responsible for managing electricity across 13 mid-Atlantic states and the District of Columbia, reported a dramatic 22% increase in its latest capacity auction. Prices cleared at $329.17 per megawatt day, the highest since 2018, driven by a combination of aging infrastructure, supply constraints, and surging fuel costs. This steep increase is expected to translate into higher energy bills for consumers and businesses, especially during peak demand periods such as summer heat waves. Energy analysts warn that without substantial investment in grid maintenance and modernization, these price spikes may become recurring. Federal officials are now evaluating emergency measures, including incentives for new power plants and grid hardening programs, to ensure reliability ahead of winter and reduce the risk of service disruptions in extreme weather. In a landmark announcement aimed at deepening strategic ties, the United States and Japan released a comprehensive trade framework combining reciprocal tariffs with large-scale investments. The agreement imposes a 15% tariff on several categories of goods, offset by a commitment from Japanese corporations to invest $550 billion into U.S. manufacturing, clean energy, and infrastructure projects. Among the planned initiatives is a major LNG export terminal in Alaska. Shared provisions on semiconductor supply chains and rare earth minerals signal a move to reduce dependency on China. Both countries hailed the pact as a milestone for regional economic security. However, experts caution that the tariffs may increase consumer costs, while businesses will closely monitor how these changes play out in practice. Markets are reacting with cautious optimism, as investors weigh geopolitical gains against near-term pricing effects. Wall Street ended Tuesday on mixed footing. While the Dow Jones Industrial Average and the S&P 500 closed at record highs, the Nasdaq saw modest losses, largely driven by tech sector pullbacks. One standout was General Motors, whose share price plunged more than 8% following a warning that new tariffs could cut $4 to $5 billion from its earnings. Investors are displaying robust confidence in broader market fundamentals and strong earnings momentum from select sectors. But GM's cautionary forecast underscores growing concerns that escalating trade tensions may dent profit margins, particularly for multinational manufacturers. Analysts believe the full impact may only emerge in upcoming earnings releases, as industries recalibrate supply chains and cost projections. Despite optimism, the market remains on alert for the chorus of macroeconomic indicators, tariffs, inflation data, and Fed commentary that could influence volatility ahead. Senate Democrats are intensifying criticism of the Trump administration's tariff policies, blaming them for contributing to inflationary pressures on American consumers. In a Monday press event, party leaders labeled the tariffs a hidden tax that inflates the cost of everyday goods, everything from groceries and clothing to electronics and building materials. They argue that middle and lower-income families are disproportionately affected as price increases outpace wage growth. The White House, meanwhile, maintains that tariffs are essential to revitalize U.S. manufacturing and protect critical industries. As inflation remains above target, the issue is taking center stage in political discourse ahead of the 2026 midterm elections. Democratic strategists see an opportunity to link economic pain to trade policy, while Republicans are emphasizing economic sovereignty. Voter sentiment on this issue could prove decisive in several key states. A growing chorus of economists is warning that the United States' ballooning federal debt and persistent fiscal deficits pose a risk to both domestic and global economic stability. A recent analysis suggests that continued unchecked borrowing could lead to a depreciation of the U.S. dollar and a sharp rise in Treasury yields, increasing financing costs for businesses and households alike. Such a scenario could also have international spillover effects, destabilizing emerging market economies heavily reliant on dollar-denominated debt. Fiscal hawks in Congress are pushing for mixed measures, including spending caps, targeted tax reforms, and reform of entitlement programs, though partisan division remains a major hurdle. The Federal Reserve has called for greater fiscal discipline to complement its monetary efforts in fighting inflation. With midterm elections approaching, lawmakers are under growing public scrutiny to commit to long-term debt reduction strategies. In a move poised to redefine e-commerce, OpenAI has begun piloting an integrated shopping feature within ChatGPT. The new functionality allows users to discover products, receive personalized recommendations, and complete purchases all within the chat interface. For each sale, OpenAI will earn a commission, signaling a pivot toward transaction-based revenue alongside its subscription and enterprise offerings. Brands participating in the pilot are seeing the potential for streamlined customer engagement, but are also voicing concerns over diminished control and visibility outside traditional search engines and marketplaces. Industry experts say this marks the first step toward a broader shift in retail dynamics, where AI becomes the central interface for shopping. If adoption grows, it may urge legacy e-commerce platforms to adapt fast or risk being sidelined in the evolving landscape. That wraps up today's headlines. And thank you for joining me on this July 22nd news briefing.